Hello and welcome to Cleaver Fulton Rankin's technology webinar, using legal services to navigate your way through the COVID-19 pandemic. My name is Hilary Griffith and I head up the corporate commercial team at Cleaver Fulton Rankin. I'm also your host for today's webinar. Due to the devastating economic impact of COVID-19, our technology clients have been using our legal services to help them navigate the new business environment. And we have drawn from our vast experience across a range of business specialisms to design a series of solutions for our technology client. And our legal services, we believe, can help you to improve cash flow, maintain company stability, and to increase revenue. Now, before we go on with the webinar today, I want to draw your attention to our technology business audit, which we have specifically designed to help technology clients identify those strategic issues that they should be addressing at the minute. You can access our audit at cleaverfultonrankin.co.uk/COVID-19. Now, a number of the issues that we deal with in the audit we will be talking about today, such as employment, funding issues, contractual issues, and commercial real estate. But we obviously won't cover everything, so please do take 10 minutes to complete the audit, and then we will get in touch with you directly to discuss the particular issues relating to your business. You can also get in touch with us directly, anybody on the screen. All our contact details are available at cleaverfultonrankin.co.uk/people. So that's the formal bit over. Now I'm going to make some introductions. I'm joined today by four of our experts. Firstly, Michael Black, who is Director and Head of Employment and Immigration. Caroline McLaughlin, who's Director and Head of Banking and Finance. Catherine Laverday, who is an Associate in our Corporate and Commercial team. And last, but by no means least, Alan McAllister, who is Director in our Commercial Real Estate team. So welcome everyone, and thank you so much for joining me today. So I'm going to kick off with you, I think, Michael, because obviously employment issues have been high in people's list of issues that they're dealing with in the lockdown period. So maybe you could tell us a bit about your views on the changes to the job retention scheme that the government introduced, which allow furloughed staff to now start to return to work.
Okay, yes, thanks very much, Hilary. Yes, you're absolutely right. Employment issues and HR issues have been of paramount significance over the last few months for employers, including those in the tech sector. There are now 9 million people furloughed, which is really an incredible number when you think about it. And it's quite interesting to see the recent changes brought in by government in relation to the job retention scheme have actually made things a little bit easier for tech sector employers to manage their staff and consider who should be furloughed, who should be continue to be furloughed, and so forth. So one of the changes that has been made recently relates to the winding down of the scheme, so that employers will have to continue to furlough staff where they wish to do so, but will have to increase the salary contribution. So government, as we know, is currently paying 80% of staff wage costs up to a maximum of £2,500 per month per employee. And from August onwards, the government will be allowing employers to pay for the costs of the pension contributions and also national insurance contributions that have previously been covered by government under the scheme. But the quid pro quo will be that employers from the 1st of July will be able to have certain staff that have been furloughed before the end of June come back on a part-time basis, which is a very useful thing to have, because obviously employers can plan ahead in terms of getting back to the new normal. From September and October, then there will be further increases in what employers have to pay for staff wage costs, so that in effect the government will be contributing 70% to the wage costs, subject to that £2,500 cap in September, and in October, which is the final month of the scheme, then government will be covering off 60%. So obviously among the considerations for employers in the tech sector will be, what do they do in terms of the end of the scheme? They need to think now about planning ahead. How can they afford to pay the increased wage costs that they will have to cover from August onwards? Starting off with the pension contributions and the national insurance contributions. And then obviously, will they need to make further agreements with employers in terms of who is going to come back part-time? Will there be further issues around pay? And what happens after the scheme? I mean, it's still feasible, for example, for employers to continue to furlough staff even when the government scheme comes to an end. But obviously, agreements will have to be made with employees in relation to that. And it's inevitable that I think, unfortunately, that some employers will probably have to consider a certain amount of redundancies. But there are a number of issues that the job retention scheme has brought to light, and we've seen a lot of queries in from employers in relation to things like holiday pay, notice pay in terms of redundancy. Who's going to cover that type of payment? Will the job retention scheme cover that for furloughed staff, for example? I mean, these are all issues that we can advise on, and obviously whenever people use the audit facility that we've provided, then these are things that we can not only advise on, but make recommendations to employers who are facing those sorts of issues.
Okay, well, thank you, Michael. Yes, there's a lot of information there, and it sounds like it. I mean, it's a positive thing, I suppose, that it's a phasing out of the furlough scheme as opposed to a drop dead date with maybe increased contribution from the employer. But we'll come back to you in a little while just to talk about the more difficult issues around maybe the decision to make redundancies. But moving on then to you, Alan, I think we've had a lot of questions and queries from clients around, obviously lockdown is now easing, and during the lockdown period many businesses were operating remotely and people were working from home and out of the office. So we'll be interested in your views, just as as businesses decide to do a phased return to work, how that might work, particularly in an office environment.
Thanks, Hilary. Yes, we will all have become accustomed, if not exactly used, to working from home remotely during the last number of weeks. This is probably not a placebo for all the ills that have been caused, but certainly it has enabled us and hopefully you to continue to provide a client customer service at a difficult time. It has also shown the skeptics among us what can be achieved by working from home, while at the same time it does also highlight those issues which cannot be dealt with fully by working from home remotely, and that there is still a need for a functioning office. So as lockdown has eased, some, but not all, will be keen to return. For those who are anxious about returning with all the issues that go with that, transport and what have you, certainly there will have to be changes to ensure that social distancing remains in place until such time as government gives us guidance otherwise, if such guidance is ever given. So right from the very moment of going back to our respective buildings, we will have issues. As you actually access, you'll have your hand sanitization point, you'll have signs directing you where to go. There'll be one-way systems. There'll be arrangements with regard to lifts and passage of people on stairs, or possibly non-passage of people on stairs. There'll be a sort of shift system up and down. And obviously there'll be new, more flexible workspaces available to us all. So all of that will be intended to allow continued social distancing, which in itself will require greater space. So part of the problem will be how feasible is it within the strictures of the current setup? Will people be able to return? And certainly it won't be en masse. There certainly, as you mentioned, there will have to be sort of phased returns. From a practical point of view, the legal arrangements by way of leases are fairly structured documents. There may be issues where consents are required from landlords, so there needs to be greater collaboration between landlords and tenants to enable this to occur in a meaningful way. So there are various issues which will have to be addressed, and in all of this, CFR's commercial property team are here to assist and provide resolution as regards your effective working arrangements, whether that's in the office, the factory, the warehouse, the shop, or whatever.
Okay, well, thanks for that, Alan. Yeah, it does sound like there'll be a number of issues for businesses to work through, and in the months ahead, just in trying to redefine the office environment, if you like. Caroline, moving on to you. Obviously, we've talked about the office environment, we've talked about some of the employment issues, but I suppose the big thing for businesses now is cash flow and the impact financially that the sort of pause in activity has had on many businesses during a lockdown period. So maybe you could tell us a bit about your views on the government-backed schemes that are available for technology businesses as they seek to return to a new normal.
Yeah, certainly, Hilary. I think that funding is probably an issue which many businesses across many sectors are looking at the minute. Probably the key difference with the tech sector is that it is known for its high level of equity investment. And I think right up to the start of this year, the level of private equity and venture capital funding had been growing rapidly. I think then when lockdown started and the COVID-19 pandemic began here, there was a bit of a shift, and some of the firms which have continued to do very well in the tech side. I think it's widely acknowledged that the big tech has been one of the winners during this crisis, but so many businesses will have continued to thrive in this sector. But alongside that, I think others will have been hit by a quick drop in funding, particularly, to name but a few, the startups and the scale-ups. There are numerous government-backed funding schemes out there, and I don't intend to look at them in any great detail today. I think a lot of the detail is available both on our own website, COVID-19 webpage, and on the government websites and British Business Bank websites for the full details. But I was really going to take a very high-level run through what I view as probably the most relevant for the tech sector. The first being the Coronavirus Future Fund, which provides 500 million of matched funding. So essentially on this one, the government is co-investing with private equity and venture capital. That scheme has been specifically focused on helping innovation companies which are experiencing financial difficulties and who usually would be relying on equity investment. And the scheme issues convertible loans somewhere between a value of 125,000 right up to 5 million, but that's subject to at least equal funding from private equity. I think it's been set up so that it's going to be a very much investor-led process, which is probably a good thing for trying to speed up the process, but effectively the government is subcontracting out that due diligence process to the investor. And I think that probably firms need to be aware of some of the eligibility criteria and some of the key features of that, which is that the business needs to have raised at least £250,000 over the last 5 years in equity funding, and that equity funding needs to have been in the form of issued shares for cash consideration, which will potentially rule out some applicants, I think. And the investors also must fall within certain categories, and businesses should be aware that the funds must be used for working capital purposes, and the maximum term of that will be 3 years. Other options out there, sort of beyond the strict government schemes, is the Innovate UK grant and loan schemes. Their Innovate UK are due to accelerate around 200 million of payments for grants and loans. There's continuity grants for businesses expecting a funding gap, and there's innovation continuity loans, which can be from anywhere between 250,000 up to 1.6 million. Also, tech firms should be looking at UKRI, the UK Research and Innovation funding opportunities, and also exploring fully the NI government grant schemes, some of which have already closed or are due to close shortly, and the Invest NI Innovation and R&D grants. So back to the government-backed loan schemes as well. There is the Bounce Back loan scheme, which probably a lot of people viewing this will be quite familiar with. It's aimed at the small companies and it provides funding just up to £50,000. Those loans are 100% government guarantee backed, and there is no repayment or interest charges in the first year. I think my advice would probably be to contact your own lender if you have one, to try and access that as quickly as possible. The process set up by most of the lenders now is pretty streamlined. It's supposed to be an online process which can be accessed fairly quickly. And I think the last one to mention, which probably again most are familiar with, is the CBILS, our Coronavirus Business Interruption Loan Scheme, which is aimed right across all the sectors and at the SME market, with providing loans of up to £5 million applicable to companies with an annual turnover up to 45 million. Again, those are government backed, 8 to 80%, and interest and costs are covered for the first year. And again, I would say I think there's been a high take up of both of those bounce back and CBILS loan schemes. And ideally, if you have a lender, go to your own lender first, because banks do tend in this initial phase to be focusing on existing customers. So I think certainly there's plenty of options out there for funding, and it's making sure that you're exploring them early and that you're taking full advantage of everything to which you can readily access.
Okay, thanks, Caroline. Yeah, and that kind of summarises, I suppose, the particular needs for the technology sector for both equity and debt funding to make it work. So that's been very helpful. I mean, I suppose moving on from that, obviously commentators are saying there has been a seismic shift in the way that we will work and live from now on. And I suppose on the plus side, the technology sector will look to the technology sector to lead the way in terms of driving change. So, Catherine, I think looking contractually, what contractual issues should the technology sector companies be looking at as they seek to be at the forefront of driving that change?
Thanks, Hilary. Well, since the start of the coronavirus outbreak, we have been advising our clients on their contractual relationships, both with customers and with suppliers, as businesses sought to deal with the short-term impact of the crisis. As the lockdown starts to ease and we move into the next phase, there are a number of things that businesses within the tech sector should be looking at in their contracts, both in live contracts and also in future contracts as well. I suppose the first one that jumps out is pricing. Obviously, as we move into the next phase of the lockdown, it's unclear as to what the impact on demand will be, but it's likely to go up and down depending on how sectors move out of the lockdown. But I think what we can probably be quite clear on is that it's going to be inconsistent for a while. So we've been advising our clients to have a look at the pricing structures that are in their contracts presently to see whether or not there's mechanisms in there to negotiate or look at the pricing during the term. And of course, as well as that, there's a need to look at payment terms as well. And of course, if there's a likelihood that you're not going to be able to meet any payment terms that are built into your contract, we find with our clients that early and open dialogue is the best approach to that. And it tends to have a more favourable outcome than leaving it to the last minute or any sort of adversarial approach. The second one I suppose to think about in contracts is force majeure, and it's been looked at in quite a lot of detail during this outbreak. And of course, it can be an important contractual provision, but there are a number of limitations on it, and it's important to understand how it works. I suppose the first thing to point out is that force majeure is intended to suspend a party's liability as opposed to relieving it completely, and so quite often these clauses tend to be quite generally drafted. They tend to be a very short clause at the end of a document, and what we find advising clients to date is that quite often they don't even refer to pandemic or epidemic in the drafting, and that's something for businesses to bear in mind in their future contracts going forward. They need to include that provision. As well as that, what we find is that quite often the clauses are drafted in a particular way so that if the force majeure event continues beyond the time period specified in the contract, quite often the only remedy after that is termination. and that may have unintended consequences that you weren't considering when you sought to invoke the force majeure clause. So it's important before invoking it or before liaising with the counterparty in respect of such a clause to look at the contract as a whole, to consider how coronavirus would impact your contract as a whole and how termination might affect it. And finally, if force majeure has already been invoked in your contract or your counterparty to one in which that has been the case, look very carefully at how to restart the contract after that force majeure period, because quite often there are very specific provisions in there in terms of how to restart that, which it's important to look at. This was the next one that I also thought would be important to flag specifically for the tech sector is the use of milestone-based obligations, which actually are very common in IT contracts and service agreements. Quite often these are based around specific dates where time is of the essence, and quite often the remedy for breach of those obligations would be liquidated damages or termination. And those remedies may not be the most practical solution in the current crisis and as we move out of this crisis. And what we find is that our clients are looking for more practical solutions in those circumstances. So suggestions that you could look at in terms of negotiation or in your future contracts might be to provide perhaps a period for such obligations to be met as opposed to a set date. Or an alternative suggestion might be to look at building in a sort of early warning scenario whereby a supplier could notify you and flag early that they're going to struggle to meet the obligation, and maybe build in some renegotiation time in there to look at renegotiating timetables, etc., and how that might impact on the service as a whole. Those are only a few of the things that you could look at in your contracts. I suppose my key thoughts on it would be to look certainly at current contracts, look at the contract as a whole. Coronavirus may well have unintended consequences or impacts that you aren't even considering. So it's important to not just focus on, I suppose, the sort of key clauses like force majeure. Other contracts may well be important here. Secondly, it's important to, well, certainly we find with our clients to date that a sort of open dialogue and collaborative approach to negotiation is more successful and favourable than an adversarial or a hostile one. And finally, for your future contracts, to our mind, flexibility and innovation and innovative solutions will be key.
Okay, thank you, Catherine. That's very helpful. And I suppose what I take from that is it's important to know your contractual position. So do read your contracts, do know what they say, but you might look for more practical solutions through good collaboration and communication, and maybe varying from the strict contractual terms, at least maybe short term. Okay, so back to you, Michael, and probably to one of the more difficult issues that we're looking at in the current crisis, and that is, I suppose, inevitably for some businesses, when the furlough scheme comes to an end, or at least the government-backed aspect of that comes to an end, that some businesses will unfortunately be faced with difficult decisions around making redundancies. So what factors do you think businesses should be looking at now as they look at those types of decisions in the months ahead?
Yes, that's right, Hilary. And obviously, redundancy processes are difficult at the best of times. But in terms of the coronavirus and the impact of the lockdown and so forth, it brings a whole new set of not only legal but practical issues and difficulties for employers. Obviously, any employer going into a redundancy process doesn't do so lightly in terms of making that type of decision, but it is important, as I said earlier, for employers to begin planning now in relation to what they need to do as the scheme gradually winds down. Clearly, employers will want to avoid any claims for unfair dismissal, particularly unfair selection for redundancy. And indeed, sometimes in those sort of scenarios, employees may also be entitled to make discrimination claims, and the impact of coronavirus, can see perhaps claims being made on the basis of disability discrimination, as well as other areas of unlawful discrimination. But there are really no winners in a tribunal scenario, because even if an employer successfully defends a tribunal claim of whatever sort, unfortunately it still must bear its own costs. That's the way it works in the tribunal. So it's very important for employers to get it right first time. And I think one of my key practical tips would be for employers to plan out and start planning out now what they should do. If they are planning a redundancy process, they need to look at establishing a timetable. Particularly if 20 or more redundancies are being planned, then there will need to be a collective consultation with staff, and it does depend on the numbers involved. But it may not be feasible for employers where they're making large-scale redundancies to actually effect those redundancies for at least 3 months, depending on the actual number of redundancies being planned by that employer. It's important to adhere to not only the collective consultation legislation and subsequent case law that has emerged. One of the key liabilities, for example, would be a 90-day protective award for every employee that hasn't been properly consulted with under the collective consultation legislation. So that's a key factor. And of course, individual consultation still needs to be taking place at the same time as the collective consultation, where people have been selected for redundancy. So a lot of practical considerations to bear in mind. With coronavirus, a lot of people obviously on furlough. The whole point of the job retention scheme was to actually save jobs. So is it, really fair in one sense for employers to immediately start making furloughed staff redundant? That's one of the things that the HMRC might take issue with, in terms of was an employer simply, in a sense, abusing the system just to sustain employees on a reduced wage and getting funding for that for a period of time, and then they had always planned to let those furloughed people go. It certainly shouldn't be the case that selection criteria for redundancy should simply just involve letting furloughed staff go. That's obviously going to, in my view, lead to an influx of tribunal claims. There needs to be fair and objective selection criteria. And obviously, as I say, a lot of planning needs to be made in advance. A lot of practical considerations have to be taken into account. Having consultation and meetings with staff via platforms like Zoom or Microsoft Teams, WebEx, these sorts of things need to be worked out. Do staff actually have access to that technology whenever they're being consulted with? There are a range of issues. I mentioned earlier about notice pay. Yes, it may well be feasible under the retention scheme to have employers benefit from having staff work their notice, and the employer will be able to get cover reimbursement from the government under the scheme. But that's the sort of thing that, again, needs to be carefully looked at. The definition of weekly pay, for example, in the employment rights legislation is going to be looked at by some employers in a different light, because they may consider where the contract allows for the actual notice pay to be paid on the reduced furlough rate. That can be a risky approach. And again, using our audit tool, we can advise technology sector employers on what they can and cannot do in line with both statutory obligations and the specific contractual obligations. And finally, one of the other points I would make in relation to redundancy schemes, and I know it does sound counterintuitive when we're talking about saving costs for employers in the tech sector, but it's worth considering the use of compromise agreements, because that will draw a line under any potential risk of tribunal litigation brought by employees, where it is, if it is financially feasible for an incentivized severance package to be paid to staff, where an employer identifies perhaps a greater risk of tribunal litigation arising from a redundancy process, it's very useful to get that into a compromise agreement, so that the employer can be taking some comfort away from the fact that the employee who has signed up to that agreement will be unable to take any tribunal litigation.
Okay, thanks, Michael. Well, I mean, I think clearly in that area more than any other, I suppose the message I'm getting is you need, it's a very technical area. You need to get specialist advice early, because if it goes wrong, it could go badly wrong and have adverse consequences for your business. And the other thing I suppose is coming out from what you said is to plan early, to make the difficult decisions, and they are difficult, face up to them, and to put your planning in place as quickly as possible. Thanks for that. Alan, back to you again, and we've been getting a lot of questions from clients about our thoughts on, you know, the whole change to the commercial real estate landscape. So, you know, as someone who deals with commercial real estate every day, could you give us some of your thoughts around those changes?
Yes, Hilary, inevitably there will be a change in the landscape. So what do we expect to see? I think the first thing is the continued impact of online shopping with the consequent online delivery and the effects that will have on infrastructure and logistics generally. Obviously, there's going to have to be increased, better digitalization to ensure effective customer service. With the increase in delivery and the white vans that we see increasingly, although they were probably more evident when the traffic was light, because they seem to be the only traffic, but now they're still there. But certainly that will have effect on roads and the need for improved, better road systems, which I think Northern Ireland's been crying out for some considerable time, but this will bring it to a head and maybe accelerate things. Greater need for warehousing. We're already seeing instructions coming in from courier firms who are seeking larger, more logistically feasible premises. In the general office space, requirements will change with, I suppose, an acceleration of working from home remotely. There won't be just the same need for the office environment, and insofar as it is still needed, it'll be certainly a very different office going forward. In the wider perspective, looking at other commercial properties, we might see a resurgence in retail parks because of the space that is available there. As a corollary to that, shopping centres will not maybe be so attractive to the consumer, as there may be issues in relation to access and wandering through malls and such like. We may see a revival in the high street. That the actual increased popularity of local shops during this will have a role to play in that. Certainly, those shops have been good to those customers that were able to use it, and it's a question of quite often loyalty breeds loyalty, so that may be an issue. From a legal perspective, again, there will be changes arising out of the need for flexibility, the need for consent to enable works to be done. We may see COVID-19 types of provisions, such as suspension of rent. I don't think we'll ever see force majeure in the lease, but certainly suspension of rent is a possibility. Certainly there will be issues with regard to the treatment of rentals, with tenants very much pushing, certainly in the retail end of things, for turnover rents, which will only add to a kickback from the landlords who don't like that. Also, with the inevitable downsizing that you can imagine may come from all of this, parties are going to have to look at perhaps relaxing the underletting provisions. So there are quite a lot of issues that have to be seen in the context of the landscape, which certainly seems to be in change and will change further. And obviously, again, these are things that we can help clients with.
Okay, well, thanks for that, Alan. And yes, obviously there are obvious challenges for commercial real estate as we move forward, but you have outlined some of the opportunities there as well. And I think actually the good thing for technology businesses was that a lot of those businesses were already working remotely and had already set up to work remotely. And I've actually heard they'd probably be the last businesses probably back into an office environment. So for a lot of those businesses, there'll be opportunities there. Caroline, coming on to something, I suppose in Northern Ireland we have a thriving fintech sector, and we've been involved ourselves in the establishment of innovation hubs around fintech, and promoting that sector specifically. I suppose from your finance background, what are the opportunities and challenges you see for the fintech sector specifically as we move forward?
Yes, Hilary, I think there's certainly both. There certainly is plenty of opportunity out there now in the post-crisis world, hopefully, as we emerge into it, for fintechs, along with plenty of challenges which will need to be navigated. I think that it's fair to say that fintechs have a unique capability to extend financial inclusion and to spur growth, and that will be something which is really needed in the months and year ahead, I would suspect. And a lot of fintechs have been seen to respond at speed to find product solutions to those who've been most impacted by the crisis, and that is something for which I'm sure they will be remembered in this. I think that fintechs will continue to play a critical role as we emerge from this, as consumers and businesses alike are starting to look for affordable funding and credit and financing out there, and that will be an ongoing theme, I suspect, over the next 12 to 18 months. I think it's been made clear that the crucial importance of using new technology in order to support and improve business, and if that was ever in doubt, which I think it probably wasn't for many businesses coming into this, it will certainly be a key area of focus coming out of it, which can only serve as an opportunity for the fintech world. And I think that we will also see the speed of digital transformation continue to accelerate at speed now as we move into the post-crisis world. As I think fintechs have always been synonymous with innovation and are likely to continue to start generating new solutions to where we find ourselves over the next 12 months. I think probably one of the areas which has also been seen as a good thing that fintechs can contribute towards is financial inclusion in the developing markets, which has become much more important during the pandemic, and mobile solutions have been seen to prove a bit of a lifeline to some of those emerging economies. And fintechs have no doubt been involved with many of the boom areas through this crisis, such as the online retail, your online healthcare, your online education, remote office software, and business continuity tools, to name but a few, really, which have benefited at the minute. But along with all the opportunities that are there are certainly challenges, and I think the current uncertainty has caused stress for many businesses, and fintech is no exception to this. We've already touched on the access to funding, and that is going to be a key issue for many businesses. I think reduced revenue is a big challenge, and I've got to remember that a lot of those fintechs have been in existence for less than a decade, and may not have any existing credit lines, which can prove problematic in the current climate. You can also find that a lot of startups or scale-ups and early stage tech companies in the fintech world will have very limited cash or capital reserves. And the demand for the fintech services is obviously dependent on activity across the globe. And I think it's fair to say that never before have we seen such a drop in global activity, which is obviously a significant challenge in the sector. The things like transactional services and payments will have declined as consumer spending has been decreasing, and fintechs relying on cross-border payments and travel, international payments, etc., will have been severely impacted. So I think it's probably fair to say that combined with a lack of funding, there are certainly challenges out there for fintechs, as well as many opportunities which are out there for both fintechs and the tech sector as a whole. And I think that it's those companies which can be shown to navigate those challenges that will continue to develop and thrive as we come out of this.
Okay, yeah, thanks, Caroline. Yeah, that's probably a very good summary, and a summary probably of what we've experienced so far in the webinar, that for the tech sector there are certainly challenges, but for this sector more than any other sector, obvious opportunities, and particularly for Northern Ireland. Catherine, just finally from you, I suppose we've got a clear message that the companies and businesses who innovate will be those that survive. So have you any views around how companies may innovate in the delivery of tech services going into the future?
Yes, Hilary, I think as Caroline has said, whilst the coronavirus outbreak has brought significant challenges, with challenges always comes the opportunity to innovate. And many believe that the new normal, as it's now been coined, is here to stay. And certainly there's no doubt that there will be permanent changes in the way in which we live and work. As shown, as Alan talked about earlier, that the movement to remote working, which certainly in Northern Ireland was something that not very many sectors were really on board with, and now it's hard to imagine a circumstance whereby that won't form part of our working life going forward. Businesses have been innovative in this period, using software such as Zoom, Teams, Skype to contact each other and to stay in touch. The increased use of apps by businesses to stay in touch with their customers, and even just simply the diversification of businesses during lockdown to enable them to continue to trade, such as restaurants turning into takeaways. Simple diversification and innovation like that can really make an impact on your business. So some things that businesses specifically in the tech sector might want to think about in terms of looking to maximise the innovation opportunities out there and maximise their growth might include looking at their skill base. What is your base? What is your skill base looking like at the moment? Do you need to recruit? Do you need to look to diversify your skill set? Maybe by bringing on board in-house software developers, engineers, data analysts, etc. And also with the employees that you do have at the moment, what can you do to seek to promote innovation and to reward those innovative behaviours in your current employee force? Other opportunities might include looking at R&D. You know, if you're a slightly larger tech business, you might want to look at investing in R&D innovation hubs. You talked about it earlier. We've been involved in a number of those, and certainly there's also opportunities to look at what funding might be available for R&D, and there are other incentives available as well for such research and development. And finally, the other one that I just wanted to sort of talk about was looking at potentially collaborating or partnering with other innovative companies, other innovative entrepreneurs, startups. We find for a number of our clients that effective collaboration with the right legal advice to protect your interests can really help to maximise growth and drive efficiencies and productivity in your business. So that's certainly another avenue that tech businesses might look to go down moving forward into the sort of post-lockdown phase. I think certainly from our point of view, I can imagine that government will be looking to technology sector and to technology businesses to really be the stimulus to the economy moving forward, and certainly businesses in the sort of more traditional sectors will be looking to technology to move them forward. So to my mind, there are a number of opportunities for tech sector businesses to really grasp those opportunities and maximise their growth and innovation in this period.
Okay, thank you, Catherine. And I think it's fitting that we probably end our webinar on that positive note, because for the technology sector, yes, there are some very real challenges, undoubtedly, but obviously very real opportunities too. So I hope, thank you everybody for your contribution, and I hope you find that useful and beneficial. Just a reminder for you, if you want to complete our technology business audit, it can be found at cleaverfiltonrankin.co.uk UK/COVID-19. Also, if you want to contact any of our speakers individually, all of the contact details are found on our website at cleaverfultonrankin.co.uk/people. So thank you.